Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back to another live stream. Good morning, good afternoon, wherever you are in the world. Thank you for being here. Feeling a little bit better today than I was yesterday. Yesterday, I had just gotten back from New Orleans, which was a trip that I did this weekend. It was a lot of fun. I mentioned I was feeling a little under the weather, but feeling much better today, which is great. And back into the swing of things. Yesterday, we had a very sharp bounce in markets. We saw risk assets get bought up pretty aggressively yesterday. So we had the SP500, the NASDAQ, the Dow Jones, all staging a bit of a recovery move. Same with the Russell, did a nice bounce back here yesterday. You had international indices higher, the Nikkei, the DAX, the Chinese stock market also making a push higher here. Just going to mark my support levels here. So I'm keeping an eye on stuff. I do think that you have what seems to be still a very strong appetite for risk for, especially with, we had earnings yesterday from a key company, Palantir, which is not necessarily it is a big company, but it's a big company based on its very high valuation. Its market cap is very big because it is a very expensive stock. But Palantir yesterday delivered some better than expected earnings, causing the stock to rocket higher up to $171 per share. The reason I bring this up is this is a bit of the animal spirits representative when it comes to stock market euphoria. People are buying, they're buying Palantir, they're buying companies that are sort of these high risk, high reward type companies. Was the fish delicious, Nick? It was so good. It was so good. So we did a fishing day. We went fishing, I think we caught like 12 or 13 red fish, I believe is the name. I'm not a fisherman. I had a lot of fun doing it. I caught 3 fish. I caught 4 fish. 2 of them were the right size to take home with us. So anyways, we brought them to a restaurant. They grilled up the fish and we ate them and they were delicious. So good. So good. So anyways, Palantir earnings were really solid. Stock market bounced up a little bit on this. Following yesterday's or Friday's big sell-off to the NFP report, we did see a bounce back in stocks. Earnings season has been mostly pretty impressive from big companies, which of course is really important when you're looking at indices. Nick, how are you? I'm looking at joining your VIP group. How many people are in the VIP channel? Can you tell me more, please? Hey, yeah. So if you want some information about the VIP group, the best way to do that would be to head over to our website, a1trading.com/VIP. Or if you'd like to ask specific questions, I don't have that stat in front of me, but if you want to ask some questions, if you want to work with someone from our team about it, I've got a link for you right here. If you click this link, you can speak directly to our support team about our VIP group. You can see the trades that I'm taking. I send signals multiple times a week on trades that I'm adding, trades that I'm taking profits on, taking a loss on, whatever I do in the markets. All of it gets shared in the VIP group. I am very frequently doing write-ups and sharing updates on my trades inside of the VIP service. If that is something that you're interested, no nonsense, no BS. I show real, performance in the markets. No nonsense, no demo trading signal services. That is not what we do here. Restaurants in the UK would allow you to bring your own fish. Yeah, they did charge. It was a $5 fee to grill the fish, so which is really not so bad. So we fished, brought it to a restaurant, and if you've ever had New Orleans food or Louisiana food, it is just so good. It's so good. So had a lot of fun. Hey, Candace, good to see you. I'm in the VIP group and find it very helpful. I highly recommend. Thank you very much, Candace, for the positive review. And I'm glad to see you are no longer banned, Candace. I went on a witch hunt to make sure that you were not banned after I accidentally banned you in a previous stream. It was completely by mistake, and I had my more tech savvy producers just double check, make sure that I didn't keep you panned. But I'm good to see you here. Gold here moving a little bit lower, was a little soft overnight session, bouncing back though. You've got a little bit of 15-minute chart showing a little bit of strength. Silver also, trailing higher. Copper, of course, just completely fell apart last week during the FOMC event, or right around that. There was a big announcement that we had some further tariffs, some further stuff going on, and the price of copper dropped by 20%. Absolutely insane. Oil prices are lower. I did trail out. I took a profit on oil, and I'm feeling really grateful that I did. Right? So price jumped to the upside, and I trailed a stop just below this structure point. And this is why we do this, because sometimes, right? So I went long over here on oil. Price jumped in my favor. I locked in my stop loss, and then the market came down and failed to hold that support level, broke through. So I did end up taking a profit, right? Not a loss, because I trailed my stop loss into profit. I took a profit, and then the market rolled over. So no longer in oil. And I believe, I could be wrong, but I don't think oil is a long or bullish setup. What really hurt the oil bullish score was the jobs report. And if you remember, if you were watching my videos and streams and stuff, like last week before the NFP report, part of the reason I really liked oil to the long side was strong jobs data. So when that evaporated, when we had the NFP report that came in abysmally, it was time to cut the trade, take a profit, and move on. What are your thoughts on gold? Man, I've got thoughts on gold. In the short term, I still see it as very range bound, and I don't have a strong opinion. In the long run, watch the bond market. In the long run, there's a really interesting story happening right now. The dollar index trending lower here. I listened to a really interesting CNBC piece this morning, just discussing, they were talking about the bond market. They were talking about long-term treasuries versus short-term treasuries. Last week, we saw a huge drop in the 2-year treasury. And the consensus usually is that the Fed follows what's happening in the 2-year government bond. If yields are dropping, it's suggesting that the Fed is likely to cut interest rates. I think the Fed is going to cut rates in September. Although there's some interesting speculation. Some people are like, oh, Powell's going to resign before he cuts rates. I don't think he's going to resign, and I don't think he should resign. But I do think that Powell will likely cut rates. We're going to probably see the Fed cut rates. We saw some dispersion amongst the Fed, some disagreements. Some people thinking they should have already cut in July, which of course makes a lot more sense now that you've had those jobs numbers. Those NFP report numbers were so bad. They were so poor. I mean, the headline number was a bad number. 73,000 jobs added compared to 106 forecasted. That was a miss. But then what was the abysmal miss was that they revised a previous number, which came in at 147,000 jobs. They revised it to just 14,000. And I believe the Trump administration proceeded to fire somebody who's in charge of something overall in the Bureau of Labor Statistics, these numbers, and to be completely fair, I mean, what is going on? How are jobs numbers this inaccurate in an age of AI and in an age of all this advancement? How are we so bad at producing reliable jobs figures? How is that? That's where the frustration is. You know what else is frustrating about this? A ton of the revised jobs were in the government employment areas. Now, the reason that is incredibly frustrating is the government can't even keep track of the number of people it has employed. Like, what's going on, right? You wonder why, people are frustrated by government spending being out of control. We can't even keep track of how many people we have employed here, right? It is frustrating. It's understandable that, these jobs numbers being so unreliable in 2025, when we have, like I said, AI, you have all these things, and a bunch of it should be, relatively tracked. We should have, relatively real-time statistics on a lot of the jobs figures. I don't know. Very interesting to me. I listened to somebody talking about this morning, and I thought that was a really interesting point is, in today's world, how are we so inaccurate at producing job statistics? So naturally frustrating and naturally scary to the market when you see such a huge revision lower. So that by itself did offer some support to gold, because people are saying inflation is still relatively high compared to the Fed's target. And now it looks like we have job statistics that were materially weaker than we thought they were. And so gold becomes attractive. Now, you may get the 2-year yield coming down, but this is a very important distinction to make. The Federal Reserve has a lot of influence on the short-term end of the yield curve. Borrowing rates at the short term are determined largely by what the Fed is doing. But the long-term yield, aka borrowing cost for the borrower, is set mostly by the market, right? So the market sets long-term stuff. So even if you put in somebody who's a super dove into the place of the Fed chairman, there is still the risk that even if they cut short end of the rates lower, that international investors who make up a huge component of, people who buy our treasuries may not be so willing to buy our long-term debt. Why? I thought this was another interesting thing. When the dollar is strong, foreign investors are more attracted to US assets. Why? Because they get the double whammy. They get to buy US assets in US dollars, which go up, and the value of the dollar goes up relative to their own currency. When they bring it back into their own currency, that is super attractive. But when the dollar is weak and people are uncertain about it, you get the negative effects of a weakening currency in investing in US assets. If you have the dollar moving lower and you're a foreign investor, right? You go in, you buy US stocks and bonds, and the US dollar depreciates against your own currency. When you go back to bring it home and you want to change it back to British pounds, or you want to change it back to euros or yen or whatever, you lose value in the currency exchange like crazy if the dollar's moving lower, right? So the concern actually right now is that people internationally may still not be willing. Look at the yield in the 2-year. 2 years at 3.7%. That's how much you get for lending money to the US government for 2 years. Here's how much you get per year for lending for the 30, 4.8%. 4.8% roughly for the 20-year period. So the longer dates, they're saying, we don't want your bonds. So you're going to have to pay us higher for the long term than you would for the short term. Does this make sense? I know this is kind of high level stuff. I say this frequently, but the bond market is the most important market by far. Everything else pales in comparison. The bond market is the most important market. Whether you trade gold, currencies, or indices, the bond market is the ultimate market. It's the most important one by far and away. If you're a fundamentalist, understand your bonds. They're complicated and difficult at first, but they are critical to understanding why gold has not had a pullback of substantial reason in multiple years. look no further than the 30-year yield or the 20-year yield. This thing continues to grind higher because people are like, we're not buying the US national debt. We're not buying it unless you give us more and more yield. That tells you a lot about market sentiment, and the longer term strength of the dollar is in jeopardy right now. That's the concern, is the US dollar looks really weak. And for you to get strength in the dollar, you needed that jobs number to be really strong. You needed, statistics to look really positive. So, bro, what is PMI? PMI is coming out later today. The Purchasing Managers Index comes out at 10 a.m., I believe. Is that right? Yeah, 10 a.m. you get the ISM Services PMI. Forecast is for 51.5. So it's a forward-looking, aka a soft data point. A forward-looking in the sense that it is a survey conducted by decision makers in the economy, people who hire people, fire people, purchase tons of things for their businesses, decision makers, management, leadership in America, in corporate America. It's a survey that is done asking them how they see things going forward. That's the way to understand it. It's a really important indicator. It's one that I like to look at a lot. It's also forward-looking to an extent because you're asking these people, what do they see coming down the pipeline? Not looking in the rear view, but looking ahead. What do you see coming? And so make a video on the bond market. I have several. Just search it up. Look up Bond Market Trader Nick on YouTube if you want some videos on that. It's the most important market. Most important market, no questions asked. And most people don't even understand the basics of the bond market. Most people, who want to be fundamentalists, again, you've made it when you have a good understanding of bonds. And they're difficult, man. They're not an easy concept to understand. You have to understand what is a bond, what moves yields one way or the other, because it's multiple facets. Inflation moves bonds, economies move bonds, risk sentiment moves bonds. What impact will PMI make? Yeah, so PMI is likely to move markets in the sense that if it is strong, it would be strong for the dollar. A higher print would be stronger for the dollar. What would that do to gold? Likely it would move it lower. What would it do for stocks? If the economy is stronger looking forward than not, is that good or bad for companies? That's good for companies. So it could be a positive catalyst to stocks. So if it's negative, reverse everything. The dollar could weaken. Gold could strengthen on that uncertainty about the economy, and stocks would likely do worse for the day if a PMI number came in really soft or lower than expected, right? It's all about how it comes in relative to expectations. So look at your forecast value. And again, if you want to make the process easy, use software to do this. Don't do it all in your head because that is way too difficult. And even though I've been doing this for almost 10 years, I still could not do it without the software nowadays. Now that I have the tools to do this automatically, there's no point in ever doing by hand fundamental analysis. It is silly, it's dumb, it's super inefficient. Use software, whether it be our tool or someone else's. If you want to be a fundamental analyst, pointless to even try without tools, in my personal view, because it is so much data, it's so much to crunch through. Tools make that data accessible and usable to the average trader. It's why hedge funds have proprietary tools to study fundamental analysis and retail traders do not. Retail traders rarely use fundamental analysis. They primarily use technical analysis. Technical analysis is great, but it is limiting, in my personal opinion, to how much you can really understand where the markets are going to move if you don't track the stuff that actually moves it. Fundamental analysis, macroeconomic data, that's what moves the markets. A head and shoulders pattern does not move the markets. Now, it may be a pattern that you can, maybe find some entries on, but ultimately what's going to move the markets our business cycles, economies, stimulus, right? From the Fed, from fiscal spending. These are the things that move markets, not technical analysis. Technical analysis is simply a way to sort of, in my opinion, look for entry and exit spots, but it does not give you directional bias that can really hold water. So today we get services PMIs. On August 1st, which was last week, we had manufacturing PMIs. They came in lower than expected. So we were forecasting 49.5. The software shows we have 48 that came in. That was a negative surprise of minus 1.5. How does that impact the US dollar? Well, you don't have to sit here and think through it. The software does it automatically. US dollar impact, bearish. Stocks impact, bearish. We missed expectations. That was weak for the US dollar and for stocks, right? But remember, when it comes to fundamental analysis, this is why I say you can't do this all in your head. We can't just look at one thing. We have to look at GDP statistics, for example, which came in much better than expected. That's bullish for the dollar, bullish for stocks, right? We want to look at each individual key component. Do you know why we look at this? Why do we look at these statistics? Because the Fed looks at these statistics. This is what they use as their guide to whether or not they want to cut interest rates, hold interest rates, or hike them. Why do interest rates matter? Because they are the money printer. If the money printer is on, off, or just staying, quiet, that has huge implications on gold, currencies, commodities, indices, stocks, options. It is the ultimate driver of markets, is the money printer on, off. How do you predict that stuff? Well, you look at the data that guides the decision-making. It's really not that hard once you start to understand why the markets move. Like once you get into fundamental analysis, you're like, oh, yeah, this is what's moving the markets. It's not some handy dandy, retail trading strategy, liquidity gap, fair value thing. Like, again, nothing wrong with technical analysis, but to believe that that's what truly is like the whole market is around that. Look, it's like a tiny population of the world that cares about technical analysis, and it's everybody on planet Earth that cares about fundamental and macroeconomic data. You know how I know that? Everybody complains when the grocery store prices go up. That is fundamental analysis, right? When gas prices move around, people take note of that. That impacts everyone. Those are fundamental forces. That impacts consumer habits. It impacts employment statistics. It's the real world. That's what moves the markets. The real world is fundamental analysis. The fake world is, obsessing over technicals and not caring about any of the real stuff that moves the markets. I know I'm on my I'm on a rant today, but it is important stuff. And if I can make that rant and someone's like, you know what, fine, I'll take the dive. I'll technical analysis. If you feel you're running in circles, the reason I'm so passionate about that topic is because I was there, right? Technical analysis. I obsessed over it for multiple years, thinking I would find some magical system, and I never did. I spent countless hours building, automations, robots to test for certain theories within technical analysis, and I never really found much of an edge there. But fundamental analysis, significantly more progress for me. So if you're running in circles with technicals, consider looking into the fundamental analysis side of things. Yes, it's a lot of work, but nothing worth having in trading and investing comes from not putting in hard work, right? It all comes from hard work. So, yeah. Anyways, here's something for you guys. If you're enjoying this fundamental analysis rant, but you're like, how the heck do I start? I've got something for you. Chandler, if you have this, we have a fundamental analysis course. If you could drop the link for us, that would be awesome. Fundamental analysis is scary at first. It's daunting. There's a lot to it, right? We have a free course that we've put together here at A1, completely free. So let me just do this really quick. Okay, so I'm gonna drop the link, Chandler. I got it for you. I'm gonna do it through the form so we can get it here. Hold on, free FA course. Here it is. Check it out. Boom. Okay, so in the comment section or in the description and in the chat right now, if you click this form right here, this form will sign you up for the free fundamental analysis course. Now, I genuinely mean it's free. You don't have to pay for anything. You can click that link, fill out the form, and it will get sent to your email directly, and you can learn fundamental analysis completely for free. Now, I also just want to put some context. This is not some sort of gimmicky, junky course. We've invested substantial money and time into designing a professional grade course on fundamental analysis for beginners and for intermediate fundamentalists. Even if you already kind of know fundamentals, put your name in there and grab this, because it is free value that we spent a couple $1,000 building this course. Completely free to you. Enjoy it. Take it seriously. Just because it's free, don't take it for granted. Sometimes people do that. There it is. No excuses, right? We're putting out some content to make this stuff more accessible to the average trader who wants to learn fundamental analysis, but feels they don't know how to start. There it is. Take advantage. It's in the chat right now. Okay, so, and yeah, if you fill that out, it will send it directly to your email, and you can come back and take your time on it, bookmark it, come back each day, get a little bit more done on it. I'm telling you, that stuff, it genuinely, in my trading career, it changed my life. And so I'm very passionate about the subject. So I hope that you already have one. It's free and very, very informative. Thank you very much for the review, Lee. Again, anybody who is looking to learn fundamentals, doesn't know where to start, that course is free and very comprehensive. What about gold? We talked a little bit about gold. I'm still very neutral on it. Soft jobs prints, but then we had some good GDP statistics. ADP was a little bit strong, right? So if I'm looking at the dollar, I'm a little bit mixed and back to neutral because of that jobs print that was really soft, right? Jolt's job openings were soft. NFP was soft. This has me back in neutral camp for the dollar. In terms of things that I'm not so neutral on, look at this. Gold's getting a bullish reading. Let's look at this. Eco score went from very negative to slightly positive. Technical score looking good. Sentiment score. So I know that institutions are very long gold. We've talked about this quite a bit. Tracking institutional positioning. If we pull up gold, we can see gold is the number one. 83% of positioning is bullish on gold here. So they're very long gold. Institutions are, when I'm talking about institutions are very long gold. So we'll keep an eye on that. The thing is, why would I not buy it right here? Well, it's still in choppy no man's land. If you give me this kind of move, right, I'm a buyer. I'm very interested in gold if we can get a breakout through that 34.25 level, especially if it comes with like a soft CPI report or something that really, really kind of tilts the fundamentals, the macro in favor of gold, right? That might be a story for me. So I'm going to keep an eye on this. I'm going to watch for breakouts here on gold. It is on the radar. You saw it there. Top Setups has it as a very modest bullish setup, a +6 score. It's not a crazy bullish score, but it's a bullish score technically. So if I had to, gun to my head, choose a direction for gold, I would be slightly bullish. Not taking a trade though, because I need that technical breakout or a reversion back down to the bottom of the range. NASDAQ also, I'm bullish, but would need pullbacks on this one. So, we had a bit of a pullback. Don't be surprised. I mean, this market is it's been drifting higher for quite some time. Don't be surprised if we do make a second run for these lows. A pullback into 22,100 looks very attractive for me for long setups. I may even look to take small attempts if we come back down to the lows here at longs. We'll see. But you had a really sharp bounce yesterday. Let's see how price moves here today. I am bullish. Would just need a pullback before I can get long on that. Okay, guys, up next, we have Trader Tom coming in hot. He's going to be sharing some of his own trading setups. He's our guest for the day, guest host, as you will. Last thing I'll say here is if you do not already, I mentioned this earlier, the free fundamental analysis course that I just got done discussing is available. Like I said, just fill out this form. It is yours for free. We put in, I mentioned this earlier, just to put some context around this, we invested several thousands of dollars into building this course. It is completely yours for free. Just fill out the form here if you are looking to learn more about fundamental analysis, CPI, NFP, job statistics, growth statistics, all of these things. How can they help you determine the direction of the market? That course should help. So take advantage of it, take it seriously, and enjoy it. Okay, guys, up next, we have Trader Tom in the building, taking over. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello traders, how are we? Trader Tom here from Simply Forex. Hope you're all having a good week thus far. I'm going to share with you, first of all, guys, a trade that I am currently in, but we'll also take a look at some other things setting up and some currency pairs that we're interested in. We'll take a look at yen. We're going to take a look at gold, US dollar. But we're going to start with the Dow Jones because I'm in a sell trade right now. And we just need to understand this sell trade. And typically how I trade, guys, as Nick explained, is I'm a technical trader. So all I trade are facts on a chart. Okay, so for you to understand my trade, I'm just going to show you the facts that made me take a sell trade. Yeah, so, whether the trade works out or not, I am happy with my trade. I had enough confluence to take the trade, right? So we're going to start with the weekly chart, and then we're going to work our way down because that's how I roll. And also, guys, I normally, live in Dubai, but I'm actually in the Philippines for 5 weeks. So if my internet is a little bit sketchy, then you know why. So if I start going bit, then that explains it. I'm literally in the middle of a jungle. Right. We're going to look at the Dow Jones, guys, right? Because I'm in it. So weekly chart. We are at a key resistance level. That's the first fact, right? The second fact is we have had a humongously bearish candle form at that level. Okay. And we have a bit of room to move into before we reach our next level of potential support in here, right? So those are all facts, right? Which makes me want, the weekly is telling me that potentially I can sell the Dow Jones, right? But then I'm going to get more information in order to make the best informed trade I can. So then we're going to go down to the day chart. And as you can see, guys, on the day chart, we was in this uptrend, okay, but now we are in a downtrend, right? We've broken these lows in here. We're getting lower lows, okay, and where the next lower high is, we shall see. But we're definitely getting lower lows. We're in a downtrend, and we're tracking below the moving average 20. This is something else visually I like to use. Generally speaking, below the moving average 20, I'm looking for sells. So that's where we are at with the daily chart, right? Now, weekly and daily give me my direction. And again, I want to sell. So if we look at the H4 now, all I've done is traded at this trend line. So you can see on the H4, price has been respecting the blue trend line all the way down, and we got this nice bearish reaction in here as well, right? So not only do we have a H4 downtrend that's tracking this trend line, we also had another bearish reaction at this trend line, right? So as you can see, here's my trade, guys. Started selling here, stops above here, and here is my target. Now, again, I'm a big believer in managing trades. Not everyone is, and each to their own, right? If people are like, look, I take my trade, I set and forget, no problem. I believe in managing my trades, right? It normally saves me a bit of R over the month. So if price doesn't behave as I want it to, as in it doesn't start coming down and hitting target, right? I'll take partial profits here, by the way, and let some profits run if the trade plays out. But if we get a big bullish H4, let me draw that candle again. I apologize, I've been drinking. If we get a big bullish H4 candle, right, that breaks above this trend line, breaks above all of these bearish candles, right, and we get this big bullish candle, I may just exit the trade early. The trade is not doing what I expected it to do. And, you know, this is typically 1%. So I would lose something like, you know, 0.3, 0.2% with this trade. And that's totally fine. So that's called cutting a trade early, right? If it's not going according to plan. And that's where I am, guys. That's where I am with the Dow Jones. We shall see how this H4 candle plays out. I'm not liking the bullish reaction we're getting thus far. But yeah, still plenty of time before that H4 candle finishes, right? So there's one thing I'm looking at. And obviously, you know, we've had a bit of a sell-off in the indices. And, you know, that has led to yen strength, right? Now, whether you're, I'm not teaching you how to suck eggs, but whether you're aware of this correlation or not, right, when the indices start dropping, the yen will become strong. It's a flight to safety. And we have seen that with every yen pair, pretty much. But one I particularly like is Aussie dollar yen, because typically, also important to know, when the indices start doing this, yen becomes strong. Okay, and typically Aussie dollar becomes weak if we're in a risk-off environment, right? So looking at this, the obvious trade would be Aussie dollar yen sells, right? And this is very much what I'm interested in. The only problem is we need price to retrace a level, right? So if we if we take a look at Aussie dollar yen, you can see we've been tracking this trend line. We know the yen has been super weak. You know, a large portion of that is the indices have been flying, and now we have had a breakdown on the day chart, right? We haven't seen that for some time. Not only did we break these lows in here, right, therefore getting a trend change, we also broke out of this trend line, right? And we've had, you know, again, guys, my job as a trader is to find as much confluence as I can. And this is all the confluence I'm sharing, right? Plus we've had super bearish candle, reasonably bearish candle. Okay, and I still think we've got a little bit of room back down to this support level through here, right? Now, I actually missed the first entry. I actually missed this entry here, right? I was out. I've sort of been, you know, half trading, half on holiday in the Philippines, right, as I explained. So I bloody missed this trade, right? I blame the Philippines. I'm only joking. I don't really. But I'm still looking to get into this trade, right? So you can see where my alarm is. So if we get price on the H4, come back into this grey zone somewhere, right? We get the moving average 20 coming round. As long as we don't break this high, I am still interested in selling Aussie dollar yen back down to these lows. It's very important for me to be with H4 trend as well. So if we did break these highs, let's say we got something like this happen, guys, right? Then I'm not interested. We've broken H4 structure and I wouldn't be interested in this trade. But if we get a reaction in here somewhere, this holds, I will be all over selling Aussie dollar yen. You know, as long as these indices keep tumbling, right? You know, this will help that yen strength as well. And pretty much, guys, if you look at any yen pair, right? Look at CAD yen, look at the daily chart, right? Breaks in structure, uptrend, break, downtrend. This doesn't have too much room, much more room to go into, guys, because we have a trend line here as well. But euro yen, Swiss franc yen, yeah, we're liking these for sales. And these have lots of room to move into. If we go to the weekly chart, right, we're at these resistance levels up here. And just look at all that free air we've got on the weekly chart. Because the yen was so weak for so long and the euro was strong for so long, right? We've got all of this room to move into. So I also like euro yen sells as well. Again, on the day chart, we've started to break down. Okay, so we are now in a downtrend. You can see where my alarm is. A retrace into here somewhere will interest me. So let's take a look at the H4 to understand why. Okay, brilliant. I'll actually bring that down to 171. Right, so if we get a retrace into here, again, I will be interested in here somewhere. If we break this high, not interested. So that is yen pairs, guys. Still interested in trading yen strength. And let's talk about the US dollar. Let me just have a quick drink, guys, before I do. Let's firstly work this trading. The thing with US dollar pairs, and I'm going to show you the problem I have with them. There's only one that I really like the look of. Now, if we start with the weekly chart, right, on euro US dollar, and if I said to you, right, guys, you have to trade this in one direction. You have to buy or sell, right? There's no staying out of the market, right? Somebody has a gun to your head, right? Hopefully not, right? Then I would buy euro US dollar, right? We're in an uptrend. Price held on to this last low, this wick held on to this last low, bounced off the moving average 20, right? So if you said to me, Tom, you have to trade euro US dollar, I would buy this bad boy back up to these highs and this 1.18 thousand level, right? That's what the weekly is telling us. Uptrend, bullish wick reaction, close back within support. Now, it is night and day if I show you the day chart. If I show you the day chart, you would be, Tom, I'm selling this bad boy, right? We are in a downtrend. And we're at a really nice level for selling in here, right? So we're getting lower highs, lower lows. We're in a downtrend. We're at a nice level of resistance in here. We've got the moving average 20 coming round. This could act as dynamic resistance. I would really want to sell euro US dollar in this scenario, right? So that's the problem with US dollar pairs. And it's not just euro US dollar. Let's have a look at US dollar CAD, right? Because if we look at the weekly chart, right, again, US dollar, Canadian dollar, right, we are in a downtrend, if not a bit of a range right now. Okay, this is where we're at. So we're in a downtrend stroke range. Okay, and then if I zoom in, let's just see what's happened at the top of that range, right? This nice big wick has bounced off the moving average 20 and closed back into this area of resistance. So again, if you said, Tom, you have to trade the US dollar, Canadian dollar, looking at the weekly chart, I would complete the range and sell it back down to these lows, right? But again, if I show you the daily chart, you want to buy that all day long, right? It's crazy how different the weekly and daily are. So this is that range we were talking about, right? We've broke the range. We've retraced to the highs of the range, right? What is, this is a lovely area for buyers, right? So that is what is making US dollar tricky at the moment. There's such contradiction between daily and weekly. So for me, I'm staying out. There's only one pair that I actually like, and that's pound US dollar for selling. Because if we go to the weekly chart, right, this is the only one that has had a weekly structure break. Yeah, you see all the others were holding on to support or resistance. Pound US dollar has not done that, right? We are in an uptrend, okay, and then bang, we are in a downtrend. Lower lows, right? Lower, not lower highs yet, but we're getting lower lows, right? We're in a downtrend. You could even argue we saw a little bit of a head and shoulders with pound US dollar, right? Okay, we broke the neckline. Yeah, we're looking for sells. And the exercise book of head and shoulders will tell you whatever this moved between here and here, it can do that again. But as we know, guys, textbook, descriptions of head and shoulders is all pretty irrelevant in the market, right? It could bounce off here and carry on up. So pound US dollar is the only US dollar pair I want to sell. Okay, now again, if we look at the daily chart as well, you can see I've got my alarm in here, right? Now, you can also see we are clearly in a downtrend. So, I want to see a little bit more of a retrace on the daily. Moving average 20 comes around. We get a reaction at these lows in here as well. You can see where my alarm is, guys. I'll be very much interested in looking at sales from that level. Now, a few guys from my channel are already selling pound US dollar, right? Maybe a little bit premature, right? Because you've got this level here that's proving to be good support. We had this bullish candle right here, but then we have had quite a bearish candle here. So it's tricky at the moment. Yeah, like I say, guys, some of my guys are selling it down to here already. Let's take a quick look at the H4 and the H1. Okay, so yeah, there we are, guys, right? If I'm going to start selling this, I would want to see a break of this level, right? You can see there's absolute just price going nowhere, right? Okay, so we need to see a winner, right? If we start seeing sellers take control, then okay, maybe we do have a sell trade. But to be honest with you guys, I'm not interested until we get up here. What else to look at? I know a few of you guys, well, everyone likes looking at gold, not the physical. Maybe people like looking at physical gold, but the gold chart. And this is also a US dollar pair, right? We can't forget that. And this is the same problem with every US dollar pair. If we go to the weekly right now, okay, bear with me. I thought my internet was about to pack up. And let me take away this trend line for a second, and then I'll draw this trend line back in. But if you were looking at the weekly chart, right, you would be like, right, this is this, okay? So we're not breaking this high, but we are starting to get higher lows, right? It's kind of an ascending triangle, if you like, right? So price will keep contracting, and then it has to go somewhere, right? Will it go higher or will it break down? But right now we're in an uptrend. We've literally just bounced off the moving average 20, which is good dynamic support. And we got this very bullish daily candle. So again, if you said, Tom, you have to trade gold, I would buy it according to the weekly chart, right? Back up to here. Now, let me look at the daily chart, right? If I show you the daily chart right now, we were in an uptrend, okay? And bang, we're in a downtrend. We've retraced and we're back at a nice resistance level, right? So again, if I start getting a bearish reaction in here somewhere, I would look for sells with gold. But because of that bullish weekly candle, I can't, right? So again, it's the US dollar pairs. They're very contradictory. And let me draw that trend line back in that I had. Okay, so you can see price was tracking this trend line, right? And we're kind of back at that trend line. Okay, let's do this. So, you know, the trend line also acts as resistance at this level. You know, can we start looking for sales from there? So there you go, guys. Those are the contradictions with the US dollar. What else was I looking at? I'm interested in New Zealand dollar, Canadian dollar buys, right? You're probably thinking, Tom, this is hurtling to the floor. What are you talking about? Let me show you. So if we go to the weekly chart, right, this is actually a higher time frame target. I have this 0.83. Now, New Zealand dollar, Canadian dollar, we've bounced up and we have just been ranging 4 months, right? Like just ranging, okay? And we've never broken the low of this range. We've never broken the high of the range. So this is quite a substantial range, right? It's holding, okay? Now, ever since we've hit the bottom of the range, right, we've got this nice big bullish weekly candle. We've got this bullish wick, but it was followed by this bearish candle. But again, the wick has closed back into these wicks. So again, this level hasn't broke. It's still holding. And a trade I'm really interested in is the following, because also if we look at daily trend, guys, right? If we just track the highs and the lows, okay, this is where we're currently at, okay? Where these lows in here are holding. They're still holding in here, but we do have higher highs, okay? So this is a little bit open to interpretation, but I would suggest that's an uptrend, right? Now, what I really like, you can see this blue trend line, but on the H4, right, you can see this trend line has just been respected. Respect. I don't know where I'm going with that. But look at this trend line, right? It just keeps obeying this trend line. But what we're finding here is we have a key level of support, you know, this here as well. And therefore, price is becoming so contracted. Look at it, right? So sooner rather than later, it may take a bit of news to do this or whatever, right? But New Zealand dollar, Canadian dollar is going to go somewhere, and it's going to go somewhere quick, right? Because of this contraction. Buyers and sellers in here, right, are just fighting. One of them will give up, okay? So if you get a big bullish H4 candle bounce out off this level, I'm going to be buying New Zealand dollar, Canadian dollar. If we get a break of these lows, I am less inclined to trade it straight away, right? Because we're at the bottom of that range. I'm really looking for buys. So New Zealand dollar, Canadian dollar, guys, is a trade that I am definitely keeping my eyes on. What else were we looking at? Let's have a quick look at my Dow Jones trade. Okay, good. This is the sort of candle we want to see. Excuse me. So yeah, let's see how that plays out. What else were we looking at today? EuroCAD sells. This is an interesting trade because I'm going to start with the monthly now. This will be the last one I show you guys, right? So on the monthly chart, we are at a key resistance level, right? Again, what I show you is fact, okay? Doesn't mean every trade's going to play out, but how I look at the chart is fact, right? So we're at a monthly resistance level and we've had a bearish candle. Right, we've had a bearish reaction at that level. Okay, and again, you know, we know with euro pairs, they became a little overextended. We had all this euro strength. You know, is it due for a retrace? Now, if it's going to retrace, this is going to be the level it retraces at, right? So now let's drop down to the weekly chart. This is a little bit of a mess, right? Because again, on the weekly, we're in an uptrend, right? But we've stopped making higher highs because we know this is important resistance. But this wick is still very bullish, right? But on the day chart, we're clearly in a downtrend, right? So I appreciate the weekly isn't ideal, right? But because of this monthly level and that big monthly candle and the fact we're in a daily downtrend, right? If this candle, let's say this daily candle finishes like this, then tomorrow I will be very interested in selling euro Canadian dollar, potentially down to here, if not to these lows here. So yeah, let's. It's looking like we're getting a H4 structure break as well. Maybe not. So this may, if it wants to come down, what is, you know, it's going to mess around first because we're in a H4 uptrend. So you're probably going to see some action like this. And then if it does want to break down, maybe we can, well, not maybe, I will wait for a H4 structure break. And once I get that confirmation, I will be interested in selling euro Canadian dollar. All right, guys. So yeah, I think that's pretty much it, what I am looking at the moment. Guys, obviously, if you've enjoyed my analysis, please don't forget, come join my channel, Simply Forex. We would love to have you. And thank you guys at A1 and Trader Nick for having me on as usual. I'll see you next week, guys.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.